Did you know that you could make millions of dollars gain in crypto, yet you could still go bankrupt? If you own more than a few $1,000s of crypto, then you need to get crypto tax advice today so that this doesn't happen to you. Today I talked to Micah of Crypto Tax CPA and author of Decrypting Crypto Taxes about US tax law and crypto. A very important episode. Enjoy. Hi, welcome to Castoshi, and today we are speaking to Micah, the author of Decrypting Crypto Taxes. Hi Micah, could you introduce yourself and just tell us a little bit about what you're doing?
Sure. My name is Micah Frame. We are collectively, me and my firm are the Crypto Tax CPA. And what we're doing here and what we've really been focused on the past couple of years is just trying to make investing in cryptocurrency without possibly bankrupting yourself with with the tax bill it generates from that income, making that easier for people and making it to where they can not only understand the tax ramifications, what they're doing, but plan around it and thereby minimize their tax bill. Because what we found when we got into the space is that there's not a whole lot of guidance out there, and you're really flying by the seat of your pants. You're really mostly on your own. So that's a lot of what we've been doing, is trying to be a resource and a guide for people so they can navigate what is kind of this like wild west of crypto taxes right now.
Okay. Have you got a physical copy there you could just hold up at all?
Oh, I can. One sec. Let me go into another room.
Oh,
Two
sure.
seconds. All right, so this is the book that we came out with. It's called Decrypting Crypto Taxes, the complete guide to crypto and NFT taxation. So this is, I think it's about 35 different chapters, somewhere thereabouts. And each one of them we designed, it's sort of just an FAQ of how are my crypto trades taxed, how are NFTs taxed, kind of the things that people were asking us most frequently, but there weren't answers out there. That's how we tried to design the book, is to where the specific issue you're running into, you can identify it and get the answer pretty quickly.
Yeah, I did read the book, and uh, it's very up to date because you even talked about things like the Terra Luna collapse and
Yeah.
stable
Yeah,
coins,
we just got it out.
and I also noticed it was very USA focused.
It is
Um,
that.
I was going to ask because I there was a couple of bits I skimmed because they were so US focused. But do you like when people come to you? Do you recommend they go through all of this hassle of taxes, like if they've got a large amount of crypto, or does it make more sense to move?
Well, it depends. US is one of the biggest pain in the butt countries, not only because of the complexity, but the US taxes its citizens on your worldwide income. Unlike most every other country out there, there might be a handful that are exceptions. Most other countries, it's where you're living and where you're earning your income. But the US, you can live in any other country in the world, but if you're still a US citizen, they're still going to tax you on all of that income. The one weird, again, getting into very like US specific exceptions, if you live in Puerto Rico, because that's a US territory, there's some weird exceptions for US citizens then where you don't have to pay the full income tax. But mostly, unless you're going to renounce your US citizenship, you're stuck having to do all this planning.
Yeah, yeah, that's correct. How did you get? So I take it you were an accountant first. How did you get interested in crypto taxes yourself?
Really, just because I started messing around with crypto. I always say that, like everyone else, when Bitcoin hit 20,000 for a split second in 2017 and the
Mm,
ICO craze and everything was going on with that, I probably bought like 3 grand worth of crypto
mm,
and bought it right at the peak. Very
mm,
quickly, that turned into $1,000 or less. Just
mm.
kind of forgot about it. But then 2020, when the market had gotten really bullish again, I checked and that that 3 grand had recovered, that had turned into one, had turned into like somewhere between 6 to 9 grand. So
Oh, okay,
it
yeah.
wasn't a crazy amount of money, but it had recovered. And then there was a crypto project that I found that it was the first time I understood the use case for a
Mm,
specific crypto token.
mm,
So got more involved in that project, started looking at other stuff. And as I got more and more entrenched in the space and getting outside of basic things like coin for coin trading,
mm,
as I started realizing there's no answers out there. So as I started planning for my own taxes, very quickly it became apparent that you're very much on your own, because the IRS has issued next to no guidance on the majority of these topics. And even if the IRS has issued guidance, if you try and find an accountant to help you walk you through it, there's maybe a dozen of us out there who claim to specialize in crypto taxes. So for the people who are making significant money, which a lot of, especially in last year, which was where we got a lot of our marketing out and started picking up clients, people were making millions of dollars, but had no clue what they were doing, no way to plan around the tax bill.
I think one of the interesting things with crypto tax is, like myself, having lived in many countries around the world, when I talk to a tax lawyer in one country, they always have to deal with their own country's tax, and they don't know any other country because there's so much
Mm-hmm.
legislation. But I see that crypto tax is a little bit different because you kind of have to keep the option open that because there's so much uncertainty around it, you might have to be more of a global tax advisor.
At least, I mean, for people outside the US, yes. Because for most other countries, if you leave that country, like we've talked to people who are, I think India just placed a not inconsequential tax on crypto transactions.
Mm,
So we've seen people who are moving from India to Dubai or to some other country that's not taxing that crypto income, or Dubai might not tax any
mm,
income. I'm not sure. But so for other non-US citizens, that can be you really need to keep abreast of those changes, because changing your location or where you're incorporated, stuff like that, can help you bypass all those taxes. At least for the US, they have a pretty good stranglehold on, if
mm,
you're a US citizen and you're the final
mm.
beneficiary of this income, they're gonna force you to pay it.
Okay, okay. I think one of the things, I don't know if it's happened in the US, but in some European countries, they've already ruled on crypto and tax a few years ago. And now some of the countries are doing a U-turn and they're actually backdate. And I've actually seen laws have been backdated the opposite of what was ruled in the past.
Mm-hmm.
And this is, I see a huge problem because there's no certainty. You could be told you have crypto and it's safe. Like someone I was speaking to the other day, they were told, I won't say which country, but near Netherlands, um, and they were told that their crypto was okay a few years ago, and they were told that everything they had was there. There was nothing due on it. And then what happened was the government they changed the law
Mm-hmm.
later, and they said, oh, actually you owe us back on what we said before. And apparently a lot of people, not just this person, but there's a lot of crypto holders who are who think that they're trying to cry foul, but no one's
Mm-hmm.
listening because no one cares about a few 1% who've got a lot of money. Yeah.
Yeah. But no, you're right. That's an absolute nightmare. And one of the things that countries, especially ones that you're only taxed on based on where you're living, are
Mm,
going to need to be really careful of, because if you have that amount of uncertainty, there's a decent chance that people will be like, well, cool that you're telling me this isn't taxable, or that this is taxed at 1% or some
mm,
favorable rate. But I saw what happened last go around, and you just retroactively revoked all of that, and this dude ends up with this huge tax bill. So governments are going to need to get as much clarity as they can, and to what you're saying, people be able to trust that that's what the way it's going to stay, because otherwise they're just going to do a risk assessment. And in their risk assessment, it might not make sense to stay in that country or to incorporate in that country or whatever their tax planning involves to help mitigate the tax bill, when they realize that the rug could just be pulled out from under them and they owe this huge amount of money 5 years from now.
Yeah, I think that's exactly what's happening. I mean, it's interesting because when I look, because I read your book, and there's very specific details like what happens with wash trading and with NFTs. You've got one of the things I loved about it was the very specific guidelines that you give, and I get worried that what happens if then the government, like even in the US, then later they
Mm-hmm.
say that one we're turning it around, and like just to hear the latest, I think it was it Gary Gensler, Larry Gens, I can't
Gary Gensler, yeah,
Gary
the
Gensler, yeah.
SEC chair. Yeah.
So it seems like after my understanding, tell me if I'm wrong, is there was this big hype where people thought they were going to get some sort of regulation, and I know a lot of companies were like they were applying for ETFs, they were trying to get guidance on crypto, and the government was just like, hey, it's coming, it's coming.
Mm-hmm.
It's going to take the time, and now suddenly they come out with now it just falls under the normal laws, and it feels like there's no guidance.
Oh, well, there isn't. And that is the absolute nightmare for crypto investors. And again, I can only speak to the US side, but talking to people in other countries, a lot of countries have a very similar landscape, and the rules aren't all the same, but they seem to kind of follow the same basic philosophy and theory a lot of times. But at least in the US, the only thing that the IRS or the SEC has issued any sort of specific guidance on, I think there's five. One is that coin for coin trades are taxable. You can't just wait until you convert to a fiat currency. There's a thing in the US called 1031 exchanges, like kind exchanges, where you swap a piece of equipment for a new piece of equipment. They don't make you count taxable income on that. They let you defer it. They've said you can't do that with cryptocurrency or any intangible assets. They've said that airdrops and hard forks are taxable income. They've said that you don't have to do foreign bank account reporting for your crypto wallets. And then there's like one other thing, but that's it. They have not touched NFTs. They haven't touched staking. No. Oh yeah, they've said mining income is business income. That's the bucket that it falls into. But that's it. So when you look at NFTs are the example I'll go to. Not only have they not just touched the concept of NFTs, but the utility and use case behind NFTs can be kind of anything. The NFT can be just your ticket to entry for a membership or mastermind or something. It can be a profile picture. It can be a game item. All the different it's so expansive what crypto is and can be, and they've barely scratched the surface on any sort of regulation. And with that, it's going to be, and even there are some people there's a case in Tennessee right now where Tennessee or Kentucky, I get confused, but it's called Jarrett versus USA, where a couple is suing the IRS to try to force them to issue some guidance on how staking income is taxed. And the IRS has tried everything they can just to kick the can down the road. They offered the couple a settlement just to make it go away so they don't have to deal with it. They're trying to get it dismissed in court now because they offered a settlement saying, hey, we don't need to litigate this. We already offered them a settlement, because they're
Are you saying they offered them money? They offered the couple money?
They offered, the couple filed their tax return and paid tax on their Tezos income.
Okay.
So the IRS is offering them a refund on the tax they already paid.
Okay, yeah.
So what's happening is that the IRS doesn't have the resources or time, and they don't even have the inclination to go out and litigate all this stuff. What they'd much rather do is have Congress pass legislation for them, and then they can point to that legislation and say, we're just enforcing what Congress told us to do, versus coming up with their own interpretation and that being litigated. But they're trying to do whatever they can just to push it into the future so someone else will deal with it. And that seems to be what Congress is doing too. They're just trying to kick the can down the road, and someone else will come up with the rules later. But in the meantime, you have people who are investing their life savings a lot of times in crypto, and they have no clue what the tax ramifications are going to be because there's no concrete guidance out there hardly. It's a really difficult spot to be in.
So what should the government do, or at the state level, in your opinion? What is there a course that you think is the right one, or is it a grey area?
I mean, I think what they need to do regardless is come up with actual guidance. I think they need to look at the items that look at how people are actually investing and trading right now and come up with preliminary guidance on that, because so far they just haven't, and people are left to their own devices. And I mean, with staking, how ubiquitous is staking at this point? We're dealing with the Ethereum merge
Mm,
right now. Like,
mm,
proof of stake is a big deal and has been for a while. There's no guidance on staking. The guidance that I give my clients on staking
mm.
is based on the guidance the IRS issued for airdrops and hard forks. So that's the
Okay,
like
yeah.
we're having to find things that are like vaguely analogous and then apply them because there's no concrete guidance for these specific things. Same with nodes. Nodes are becoming more and more prevalent. The guidance that I give clients on nodes is based on the guidance the IRS gave for mining income. So
So,
that's what we're running into, is there's this complete lack of specific guidance out
mm.
there.
So could I ask you a question? Is it possible that there's someone who's who's mined some Cardano, say, and or Tezos, say Tezos, and they're in the United States, and they they've got their Tezos, and then there's a hard fork.
Mm-hmm.
But they just kind of forget about the Tezos because they got it in the early days and they can't find
Yeah.
their wallet. There's a hard fork, and then there's another fork, and then in 5 or 6 years they turn on their computer and they find that they have this Tezos, but they can't remember their password. Are they like? Is it possible that they could end up owing a lot of money to the IRS?
They shouldn't, because what the IRS will talk about, the sort of the legal term they'll use is dominion and control. They'll say that when you receive an airdrop,
Mm,
that's taxable upon receipt, and when you have dominion and control of the asset. And what they mean by that is when you have full unfettered access to it and the ability to use it however you want, to hold it, to sell it, whatever. So if it's on, let's say that you receive an airdrop, but there's no exchanges that allow you to trade it,
mm,
or it's just it's an S coin and there's nothing, you can't
mm,
actually sell it. Well, you don't have to claim as taxable income. I'd say the fact that you don't have access to that wallet and you don't have the password
mm,
or any ability to
mm,
exercise a trade on it,
mm,
then it wouldn't be taxable then. What would happen is that if you did recover the password down the road,
mm.
you could make an argument that maybe you should amend the return. But I think at the very least you'd want to, when you regain access to that wallet, then you'd need to claim those airdrops as income. But it wouldn't be during this lockout
Mm.
period that you don't know if you're ever going to be able to get it.
But I know how much tax lawyers cost over here. I mean, tax lawyers
Yeah,
to cost $700 an hour is
easy. Yeah.
is easy. Yeah. So, but normal people aren't going to do that because they won't be able to afford like even I know even a small tax case can be like 80 hours. That could
Mm-hmm.
be like $50,000. They're just not going to do it for. Are you going to get people caught and they just end up paying money to the government, which they shouldn't even owe because they can't afford a tax lawyer.
It's very possible. And that's the hard part, will be when there's if you get audited and the IRS says that you owe them $1 million.
Mm,
Well, that's sort of easy because then you hire a tax lawyer at that point. The
mm,
cost benefit
mm,
of defending the
mm,
case is very clear, because it won't cost you
mm,
nearly that much
mm,
to defend the case, to
mm,
negotiate the bill down. But when we have clients who get the IRS will, usually it's not even like an actual audit. It'll just be like a
mm,
mismatch in the IRS's
mm,
system, where they see something and it doesn't, they can't
mm,
reconcile it with their
mm,
records. When that's when that's a couple $1,000s, that gets to be a lot harder, because even just getting us to write letters for you,
mm,
especially because the IRS is
mm,
so understaffed that half the time they
mm,
don't even respond anymore, and you've got to send the letter
mm,
5 times, that gets to be a lot harder. And we have to tell clients, look, I'm happy to do this for you, but you're probably going to be better off either writing the letter yourself or just paying it, because you're probably going to pay us the amount that they're saying you owe, and it might not even get fully resolved. So yeah, it's going to be for people who are sort of hobbyist crypto traders. If they do get caught in those crosshairs, and they make this sort of middling amount of money that generates a kind of modest tax bill, yeah, you're out, because you see that with people already with traditional investments or businesses or something like that. So yeah, crypto is not going to be any exception. It might
mm,
actually be worse, given
mm,
how emergent a market is, and how the tools aren't going to be
mm.
as finely tuned as they are for other areas.
Yeah, I mean, I've personally seen people who've ended up um, much worse off financially when they, because here in Europe, the governments are trying to, some governments are trying to get hold of 90% of people's holdings. I mean, there's a
Hmm.
lot of stuff going on. Um, I mean, would you like, have you ever advised? I mean, I know the number of crypto, I don't know how many crypto millionaires there are in the USA, but have you ended up, well, as one of probably the only specialized crypto lawyers in the US yourself, I
Oh,
guess you have.
I'm not a lawyer, just to
No,
clarify.
no, 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 no. But sorry. Understanding you have a having. I mean, having read your book, I can see that you have an understanding of how it works, and it's
Yeah,
probably very few people with that knowledge in the US who understands it at that
right.
level. So you're probably one of a handful of people can go to in the United States. But do you ever advise people to say, look, this is going to be too complicated, just get out?
To exit crypto entirely?
No, actually, no, I was thinking exit USA, but
No, well, I mean, normally we'll go through the process with them, but most people do not want to. The only way to fully do it is to renounce your U.S. citizenship.
yeah,
And
okay.
at this point, we haven't found anyone who is inclined to do that. What we found a little bit more, even though I don't know that I've had anyone who's actually moved yet,
Mm.
the concept of moving to Puerto Rico is
Yeah.
pretty appeal, because you'll see, like, a lot of these internet influencers are,
Mm,
I think, like some big YouTubers,
mm,
people in Puerto Rico are getting upset because you're having all these people who are just moving, and then it's
mm,
making the cost of living higher, and it's
mm,
harder for them
mm,
to survive there.
mm,
We're seeing more people who are taking advantage of that loophole,
mm,
but renouncing your US citizenship is such a final step that
mm,
no one, at least that we've seen, has seriously
mm.
taken that as a real option.
I think here in Europe, I've seen it a lot more. A lot of people have just moved to where the regulations better. I mean, the EU itself, I think one of the trends I see is that like the different countries in the EU, they don't have harmonized tax laws. So with
Mm-hmm.
crypto, I think they see the opportunity. Oh, hang on, we can harmonize crypto tax laws. And the thing is, honestly, it's a mess. It's a mess. I mean,
Mm-hmm.
I live in Gibraltar where they've got kind of sane tax laws. Um, and yeah, as you said, there's a few other places like Dubai. But yeah, there's not really many places people can go where they're still in a jurisdiction that they want to live. I mean, I know also people who've gone to El Salvador, but those people don't want to live there. They're just
Right,
incorporated there, yeah.
right.
And then they live in a totally different country. Um, and I'm just living myself in Gibraltar as a normal citizen. So,
Yeah.
so for me, it's because I actually like the place, But there's a lot of but I personally see like migration of crypto people. I mean, but
Mm-hmm.
what do you think is going to happen to the people who are holding large amounts of crypto? Do you see there's going to be a crypto migration, or do you think that the tax laws are just going to evolve and people will just, stay where they are?
Um, I don't know. It's so, I mean, I could hypothesize a little bit, but it's going to be so contingent on what the overall landscape looks like. Because to what you're saying, if the majority of the world becomes sort of crypto tax havens, to where come move here, we won't tax your crypto income, this is amazing, then the holdouts like the US that are much more aggressive in how they're taxing their citizens on their worldwide income, you're going to see potentially more and more concessions if the competition out there is more favorable. If there's sort of a reverse where there's a global tightening on crypto and the majority of countries are taxing it more aggressively, and there's like one or two little holdout countries, then you're probably going to have people less inclined to do it because they've got the option of two places to move and they may not want to live there. So right now, the good and the bad of everything crypto related is that it's so in flux. Where the technology's going to go, how it's being taxed. I mean, we're even seeing this now just with the migration from proof of work to proof of stake, where one of the big things that I've been seeing people criticizing is that right now Ethereum is a very decentralized, it's got its own issues, but it's decentralized. But when it moves to proof of stake, you've got places like Coinbase that hold 25% of the Ethereum deposits, and they're going to be these hugely powerful stakeholders. So decentralization suffers. It's really cool. Part of the reason I love the space is that it really is like we're on this bleeding edge and we don't know fully what's going to happen. It could be this very revolutionary thing, but that kind of cuts both ways with the uncertainty that's in the space as well.
I mean, are you involved with, because in your book, I can see that you understand all the mechanisms, the financial mechanisms in crypto. Are you at the level where you can understand how smart contracts are written or anything like that? Or
oh no, I'm not a developer by any stretch. So
okay.
my expertise is in the financial ramifications and understanding the mechanisms well enough to understand how the IRS is going to view them from a tax standpoint. But no, I wish I understood code better, but I do not, unfortunately.
Okay. No, just asking because sometimes I see when crypto is being taxed, to me it's a little bit like the internet in its early days and the government saying we're going to tax the internet. And sometimes I think this is ridiculous. This is just a technology. Yeah.
Right.
And if someone makes an actual financial gain in their bank account, like like imagine if every time someone had an IP address, each IP address was like it's just ridiculous,
Right.
And now those IP addresses, like one IP address from 1995, the way that IPs split up, it might serve like 1 million websites or something. Yeah. So
Right.
it kind of seems a bit backwards in some ways.
I think they're going to have a really hard time because, especially the SEC, because there's a big debate right now as to whether or not cryptocurrency for tax purposes should be viewed as a security or just general property. And security has its own, securities that's going to be regular stocks. So that has all these layers of built-in legislation, regulations that you have to deal with. So there's that sort of overarching debate going on. And for the SEC to regulate crypto and really enforce it, they're going to have to change the existing regulations and rules to give themselves authority, or for Congress to do it later. And the hard part's going to be is that whenever you do any sort of legislation, if you make it too broad, it's just unenforceable. The courts will say, look, you phrase this in the vaguest way possible. This isn't a real law. You can't do anything with this. But if you make it too narrow, all the people who are really smart crypto and blockchain devs, all they're going to do is slightly tweak the project and the technology to bypass and fall outside of those regulations. So that's what's going to be, kind of to your point of like people not really understanding it and early days of the internet. What I could see happening is, as they are trying to get more of a grapple on this, either the legislation or regulations they come out with are going to be so vague that you can't do anything with it, or that it's so narrow that people are able to just slightly tweak their projects and fall outside of the scope of that regulation. So it's going to be an interesting time here in the next couple of years as they increasingly try to get that authority.
Okay, interesting. Okay, so could I now ask you to like put on your like tinfoil hat and
Sure, we can
and
try.
and of course none of this is financial advice, but what do you think about ETFs? Do you think that um like if you're a big corporation and you want to invest in crypto, do you think that they that they still don't have the ability to actually put funds into Bitcoin or Ethereum, and do you think like that's going to happen?
I think it's going to, again, I say this as a financial like person, not as a tech person. So if
Mm,
there's difficulties from the tech side, that's
mm,
outside of my purview.
mm,
But we already have that Bitcoin futures ETF that
mm,
came out maybe a year ago or
mm,
something. I think increasingly we're going to see more and more, because that's one of the challenges with crypto, right? I'll have friends, they know that I'm big into crypto, so
mm,
they decide that they want to buy some,
mm,
and it's always and anyone who's the crypto person with their group of
mm,
non-crypto friends
mm,
probably knows the frustration of every step of the way, them being confused, like, what do I do now? How do I do this?
mm,
How do I fund it? How do I send it to, how do I set up a wallet? How do I
mm,
send it? Is this the right network?
mm,
So that's one, I think that's going to be, even though that is maybe good from a technology
mm,
standpoint, that's a big hassle to mainstream adoption,
mm,
is because it's granny is never going to go and buy Bitcoin and
mm,
store it in a cold
mm,
wallet.
mm,
She's going to be really confused. So I think if crypto is going to get mainstream adoption, I think ETFs are going to be a big part of pushing that pushing that forward, making it easier to hold. Um, because not only is there just a difficulty in purchasing it, but right now it's where you hold your crypto became a lot riskier with
mm,
Voyager and Celsius and these other
mm,
exchanges going insolvent and bankrupt. So now you've got the choice of, okay, do I go self custody, which
mm,
has its own
mm,
risks
mm,
associated with it? You lose your keys and it's gone. Or do I hold it on a centralized exchange that maybe gets hacked or maybe goes insolvent? But if it's held in an ETF, then theoretically some of those safeguards and regulations that are there for the traditional financial system will make people a little more comfortable holding it, and it'll make it easier to buy. So maybe it's not going to be, crypto zealots aren't going to be happy with that, but I think for the people who are like, oh yeah, I'd like to own a little bit of Bitcoin, I'd like some exposure to the crypto market, and I can go to my Fidelity account and click buy and I know that it's safe. I think for those people it's going to be a huge
mm.
kind of just accelerant to them being involved in crypto. And with that, I think that's going to help the price a fair bit. But again, that's tinfoil hat. I could be completely wrong on all of that.
I think that's why I asked earlier about the technology side, because one of the things with crypto is like I'm also one of the only people in certain groups who understands crypto. So people always say, which coin should I buy?
Yeah.
and
Right.
and I always say none of them. I say, what? How long do you want to make money? They're always like, I don't know, quickly. So um, yeah, I think holding crypto is actually an unsolved problem because, I mean, even these billion-dollar companies haven't figured out how to do it. And
Mm-hmm.
and even if you keep it on a hardware like wallet, no one knows if, like, when you buy a hardware wallet, even direct from the manufacturer, no one checks the code. No one knows
Yeah.
if there's a backdoor. So it's possible that could all disappear one day. All these hardware wallets could get drained suddenly.
Mm-hmm.
Um, so yeah, it's weird that it's a financial instrument, and I know a lot of like really deep techie crypto people say to me, "Oh well, not your keys, not your coins," but they have no, like you said, they have no understanding of how normal people buy crypto. And they don't even realize that when a normal person, like we have banking apps here, you can just say buy Bitcoin, takes it straight from your bank account in your normal bank app.
Hmm.
But the problem is a lot of that crypto doesn't even exist. It's just they add one to a counter on their website. So
Right.
if this, I've said this in other episodes as well. There could easily be 25, 30 million Bitcoins in existence because I bet you a lot of those Bitcoins that have been sold don't even exist.
Yeah, I mean, well, again, not I can't speak to the tech side or the blockchain side, but you just look at the traditional financial instruments and the different things they've come up with. I mean, look at when we had the financial collapse in 2008 and those CDOs,
Mm,
those
mm,
collateralized debt obligations,
mm,
where you had it to where not you're lumping all these sort of bad assets
mm,
together, and then you have it to where people are doing, I don't know if you'd call it a synthetic or a derivative,
mm,
but you're having it to where there were only so many mortgage bonds there to actually
mm,
buy. So then people started making these bets on either side of if it would
mm,
go up or down, and coming up with, okay, there's X amount of mortgage bonds, but we've got 50 times as much out
mm,
there for people
mm,
to invest in.
mm,
So it's not like it's not something we've seen it before with in other
mm,
areas. So
mm.
it wouldn't be that surprising, unfortunately, if that did happen.
Yeah, I mean, yeah, one of the issues is because a lot of crypto people have said we're decentralized, but the last year has shown that crypto is just basically been a copy of normal finance and
Right.
even more scammy because there was no controls whatsoever.
Oh yeah. I mean, well, that's what's terrifying is when you're seeing the things that, and again, whether or not they can really enforce them or not,
Mm,
but stock price manipulation, these different things that would not be allowed for traditional
mm,
securities because crypto is are not considered securities at this point. Celebrities and
mm,
influencers and all these
mm,
people are able to go out and
mm,
pump and dump, and then just seeing, again, going to Voyager. I think they ended up everyone got their cash deposits back, but there was a big scandal within that scandal of how they said that all the cash deposits were FDIC insured. And that's what was in all their, so
mm,
that's in the US, the
mm,
Federal Deposit
mm,
Insurance Commission, to where up to $250,000 a year deposits are
mm.
insured by the federal government. Well, then the bank that Voyager was affiliated with said that only happens if we go insolvent, and we're not insolvent. The fact that
Ah,
Voyager goes insolvent is irrelevant. So thankfully, I think they freed up enough money to give people back those
mm,
deposits. But you're just seeing how very we're seeing the bad side of deregulation.
mm,
That there are times when regulation is just onerous, it and it stifles innovation,
mm,
all that stuff. You're also seeing that there are consumer protections in there that you
mm.
don't have because crypto doesn't fall into the traditional financial system. So yeah, to what you're saying, I agree completely. And we're also we've seen, I can't think of a good example now, but just how centralized it is when they're able to roll back transactions, or when protocols have
Mm,
had different proposals, but then they just force them through because the nodes only get to do basically a suggestion of what they think
mm,
should happen,
mm.
not the final. So yeah, we're seeing it be, like you said, a copycat much more than I think people want to admit that it is.
Yeah, I mean they have also they have now. Is it the OFAC in the United States
Uh,
where they're trying to sanction Tornado Cash and
oh,
and
I
they
saw something about that.
yeah.
I haven't looked much into it. I saw a headline.
I mean it's scary because all these crypto companies, without even court orders now, people working in those companies, so scared of getting I don't know, fined or something or whatever,
Mm-hmm.
that so what it means is, just say if you've traded with Ethereum with someone who's traded Ethereum with someone who's bought something with Tornado Cash, you could get blacklisted because
Mm-hmm.
that is the scary part, because basically it means that crypto's not decentralized and
Mm-hmm.
so um Because if this, I mean, I think they're trying to get to the block level where they're saying what can and what can and can't go into a block. And that's the scary part. People are scared that it's going to mean that crypto is basically not decentralized at all. And the fact that all these companies, big players, except for Coinbase is actually a good player here, and Tether, they're being very, they're not bowing to what the government says, but there's a real danger that all of these other companies are just going to turn it into a shadow financial system, which will basically make it pointless because,
Right.
yeah.
Yeah, and that's what's going to be interesting, as the government generally doesn't seem to care for crypto. That's one of the things I think is going to be interesting, is with just going back to the technology aspect of sort of Web3 things
Mm,
that are utility based,
mm,
or I'd say utility based, not outside of just traditional financial
mm,
systems.
mm,
So I think that's what's going to be interesting as the government continues to try and get their like stranglehold over crypto, is how those projects that aren't really competing with the traditional
mm,
financial system, if they're going to start to flourish much better
mm,
than the ones that are competing with payment processors
mm.
and stuff like that. That's what's going to be interesting to me, is if we see nodes, Web3 utility type things that
Mm,
are there for security
mm,
purposes, for
mm,
instance, how if they're going to be doing better than the ones that are payment processing, and the
mm,
government continues just hammering those projects with regulations and more onerous things to make
mm.
it harder and harder for them to exist the way they were intended to.
Oh, do you mean like utility tokens, which actually have a
Yeah.
purpose? Yeah, that makes
Yeah.
sense. Yeah. Okay. Um, okay. So what else should we talk about? I mean, so for someone living in the US, they can come to you, and we'll share your links in the show notes, of course. But what's your website? Could you spell it as well for the sake of our
Sure.
audio listeners?
Sure. It's cryptotaxcpa.com. So that's CRYPTOTAXCPA.com.
Dog. There you go.
um so that's our crypto site, where we've got not only our contact form, but just free resources for, again, any FAQs or just kind of topics that you're wondering about. But yeah, I mean, the big thing that we'll talk about is, because we'll have people who contact us and they've traded a couple $100 worth of Bitcoin or something. With something like that, you're fine. The reports the exchanges will give you are probably okay. But the more expansive your crypto activity becomes, not only are we just talking about the scope being high enough and the profit level being high enough that we really need to do some planning, but there's also there's structural changes in terms of, if we run that through an entity for you, the timing of those transactions. When it's a smaller portfolio, there's no real way, because we are specialized, we're not cheap. So for the smaller portfolio, there's no way to justify our fees. But once you have it to where you're making a couple $100,000 and you've got it spread across these different buckets, pretty instantly we can pay for ourselves. And beyond just the tax savings, there's just some behavioral things that we'll talk to people about, because at least in the US, the way they tax you is based on the calendar year and the transactions you had
Mm,
during a calendar year. So a lot of people who are coming to us now had really, really good 2021s,
mm,
did not cash out in time, just kept reinvesting all of their
mm,
profits back into the
mm,
market. And then not only did the market go down 50 to
mm.
70%, but sometimes they were involved in altcoin projects that are down 99%. So
Wow.
they, in 2021, have these huge realized gains. They've got this massive amount of taxable
Mm.
income, but since they didn't cash out and the market crashed, they can have six-figure tax bills, but their portfolio is completely wiped out.
Oh, so
So
is that the case? So is it people who've got massive tax bills and have got a high tax bill than the amount they own?
yeah,
Wow.
we Well, I give one example where there was someone who made over $1 million last year with different trades and other income
Mm,
sources, but they kept one project was generating a lot of that income for them.
mm,
So instead of cashing out 40-50%, just instead of cashing out as they were making those trades and setting it aside in a bank
mm.
account, they just kept rolling it back in that project. Well, the project went down 99%.
Oh,
So
damn.
now
Yeah.
they don't they've got a six-figure tax bill, and their portfolio is worth less than half of the tax bill.
And is the
And
government, is it, oh, sorry, go
no, I mean, so all the government looks at is that year, like, you made this money, that's what it was worth then, you owe us this tax. And we have to refer them to, we don't really do audit representation because we'd get a client would be audited once every 2 years. So we're just not
on.
that great at it. We have to refer them to tax attorneys to try to negotiate that bill down, versus if during the year they had been working with us and we just said, okay, cool, you made $100,000. Let's cash out 40,000 of that, just put it in the bank, have it earn a little bit of interest. If they'd done that, they would have been fine. But since they weren't cashing out as in
Mm,
real time, they were just optimistic that the market would keep going up.
mm,
They realistically could have bankruptcy or something akin to it, to what, or at the very least, they might just have to liquidate the rest of their crypto portfolio to pay this tax bill. So a little bit of planning goes a long,
Oh,
long
wow.
way
That
in
that
this
that
space.
alone means people should use your service, because I mean it's sad to hear. So there's people who've made money and they've got nothing, and they're
Yeah.
basically bankrupt.
Oh, it's heartbreaking. It is.
Oh,
It is.
wow.
I mean, yeah, it'll make me literally like sick to my stomach when they're
Yeah.
describing the situation to me, because occasionally, again, because these are people who weren't working with us, there are sometimes people will, I can't, someone did really well on some altcoin and they reinvested it into some node project that just like went completely belly up.
Mm,
In that case, but it all happened in the same year. So in that
mm,
case, it stinks because they made a bunch of money, then lost it all in the market. But at least it was a
mm,
wash when it comes to their tax bill.
mm,
But for the people where there's a timing difference and they not only lost their whole portfolio, but also have
mm,
taxes, I mean, it's a horrible
mm.
situation. It speaks to the utility we can provide,
Yeah,
but
yeah.
I mean, you just feel awful that there's nothing you can do for the people
Mm,
to really help them.
mm.
It's not a good place to be.
Oh, wow. Okay. So yeah, that is something which I think catches out a lot of people, because because people have been treating it kind of like this magic internet money, and it's just, and it doesn't really exist, but it's real. And
Yeah,
yeah, okay. Um, okay, is there any other topics that you have that we should bring up? Oh,
not really, because a lot of there's plenty of things we could talk about, but so many of them get a little bit in the weeds and like very granular as to specific type of income and how we tax it in the
mm,
US.
mm,
So the big thing I'd say for anybody is, and again, sounds cliche, but planning goes a very long way. And whatever country you're in, assuming the crypto is taxed in some capacity,
mm,
just make sure you're planning with your tax advisor throughout the year that
mm,
for where you live, that you're optimizing your transactions and structure to minimize your tax bill. Because at least for us, once the year ends, we lose 90% of our flexibility.
mm,
So people who try to come to us when the year is closed, when they're trying to get their taxes prepared
mm,
for the prior year, there's not a lot we can do for them, versus if we're planning with them throughout the year, there's a
mm.
lot we can do. So wherever you are, just don't bury your head in the sand. Make sure you're talking to professionals to make sure you're planning appropriately as the year goes on.
Okay. Okay, that sounds like good advice, Mika. So, okay. So I think we'll close off here. So, thanks very much for your time today.
Thanks for having me.
Okay, and we'll speak soon. Thanks.
All right, thanks. Bye.